All of the bros on Seeking Alpha have been saying how stupid and how mentally deranged Cathie Wood is because she sold a bunch of stock to buy Tesla and has been unloading certain shares over the last few months and loading up on Tesla. In fact, she just dumped 2 big positions in 2 other electric vehicle manufacturers. However, it's paid off big time. In fact, ARK Invest are making a stunning turnaround as a result. Hello, my friends. Welcome to the channel. Great to see you. My name's Sam Evans. Hope you've had an amazing day. And a lot of people, I have to say, have contacted me and said, I've lost this much money on Tesla. I've lost X amount of money on Tesla. My advice, well, at least to myself, is always, this is a long-term investment, Sam. You have to think about it that way. It's not a day trading maneuver. If you want to play day trading, well, you might as well go into the casino and just put your money on blackjack or something like that. Seriously. I've had a few people approach me saying, I've lost this much money on Tesla. Therefore, I'm going to buy Tesla shares when the market hits a certain point, because at 9 a.m. this will happen, and then later on in the day this will happen, and then I'll make all that money back. It's going to be amazing. You know what? That is a losing strategy. That rarely ever works. Yeah, I'm sure it works on occasion, but my general advice is don't try and outsmart the market. Just pick stocks in the same way that Warren Buffett does for fundamental investing. I think that's what Cathie Wood has been doing. In fact, Cathie Wood's ARK Invest sold nearly $42 million in Exact Sciences and 2 other electric vehicle manufacturers in the past week. This meant that the diagnostic sciences company is no longer ARK Invest's largest holding. Once again, it's Tesla. Wood purchased 13,243 Tesla shares at the start of the week, and the electric vehicle maker now comprises 8.83% of the fund's total holdings. In other words, ARK Invest have been loading up big time on Tesla and selling other stocks over the past 4 to 5 months. Tesla has surged more than 25% in the past 5 days, and it's on pace for its largest monthly gain since last summer. One of the key reasons is this. Elon Musk said, we have thus far in January seen the strongest orders year to date than ever in our history. We are currently seeing orders that are almost twice the rate of production. In other words, it's possible Tesla are seeing orders at the rate of around a 3.6 million plus basis per year. 3.6 million plus. Imagine if Tesla actually were able to produce that many vehicles. 3.6 million. That would make them the world's 5th largest automaker. So what else has Cathie Wood been doing? It's probably worth paying attention, because I think they do a lot of work analyzing the likely performance of other electric vehicle companies. Well, Cathie Wood has dumped her shares in Chinese electric vehicle companies. In fact, ARQ now holds only 200 shares of Nio, which is nothing, after constantly unloading stock over the past 10 days. In addition, ARK Invest have dumped another electric vehicle manufacturer in China, as have I. In fact, I did a couple of months ago. Now, the interesting thing here with Nio is that Cathie Wood actually bought Nio stock 10 months ago, but she's since almost completely unloaded that position. ARK Invest reduced its position in Nio for the 3rd straight time this week to just 200 shares. As of January 27, ARQ's holdings in Nio were valued at only $2,400, its lowest ever disclosed in its history, which is, to be honest, quite a shock. Why would you even keep 2,400? What's the point of that? I don't really understand that. For a big fund, it's absolutely nothing. Anyhow, on the 25th of March 2022, CNAV Post says that amid a broad decline in US-listed Chinese companies, ARQ bought 420,000 shares of Nio worth about $8.5 million. At the time, that represented 0.5% of the exchange-traded fund's total position. It was the first time a Wood-managed fund had bought Nio shares, with the average cost of the position at about $20 a share. At the same time, ARK Invest bought more shares in BYD and in Xpeng. And on the 17th of January, RQ sold 325,795 shares of Nio stock, and then later on it basically dumped the rest of its stock. However, in addition to selling Nio, RQ sold Xpeng shares 3 times in January, selling 170,000 shares on the 6th of January, and on the 9th of January and 10th of January, they sold a combined 450,000 shares. As of the 27th of January, RQ holds only 368 shares in Xpeng, worth about 3.77 million, or 0.42% of the exchange-traded fund's total position. In other words, they've almost completely liquidated their position in Xpeng. And to give you some context on this, Xpeng said they were aiming to deliver 300,000 vehicles last year. Of course, the total figure was way under that number. It wasn't even half of that. And then now this year, they're saying their guidance is for deliveries of 200,000 vehicles. The big challenge for Xpeng though is profitability. Right now, they don't make a profit as a company. In fact, they've never made a profit in any quarter in their history. And the challenge here is that right now, the Chinese automotive market is having one of its toughest months ever. January has been a big down month. It usually is, but it's a really big one because of the fact that a lot of subsidies, in fact, most subsidies in China have now been removed for electric vehicles. And at the same time, Tesla has gone and discounted its vehicles massively, which have driven a lot of people apparently to cancel their pre-orders for Xpeng vehicles and even Nio and BYD vehicles in order to buy a Tesla. All of this means that Cathie Wood's ARK Innovation Exchange Traded Fund has climbed 31% in the past month, and it's on track for one of its best months ever. ARK is up 2.35%, trading at around $39 US. Of course, ARK is not really their EV fund. It's to do with more biotech in that kind of area. Now, what this all means? Well, investors' appetite for tech-heavy bets like ARK has come back in the US after getting crushed by the Federal Reserve's tightening of monetary policy last year. Traders are now eyeing cooler inflation that could put the central bank off its path of aggressive rate hikes. I think the Fed is close to ending this tightening move, Cathie Wood said in a call with investors earlier this month. She believes that a pivot would strengthen her fund's growth-focused strategy. So, hopefully you didn't sell your Tesla stock right before this recent rise. My opinion is hold as long as you can. Well, at least until you think it makes sense to do so. Right now, Tesla is still one of the fastest growing companies in history. And I think one thing we're really underestimating with Tesla is its potential in other areas, including energy storage and the Tesla Semi. As you can see, Cathie Wood is back from the dead. And I'd have to say, she's not looking so silly anymore. Let me know your thoughts in the comment section below, and thank you for watching.